If we're in a recession and we have two negative GDP growth quarters, why is the stock market going up? And I'm going to try to answer this in the shortest possible way and say, lagging mother effing indicators. What does that mean? By the time we realize that we are in a recession, the economy already realized this, and the economy is already turning things around. We have crazy inflation, right? 9.1% stated inflation by the CPI. Now we're waiting for CPI, which we're going to get later on this month. I believe that inflation peaked at 9.1%. I don't think that the CPI is going to go higher than 9.1%, and I do believe that it's going to drop. There's a couple of things that's currently happening in the economy that's going to be reducing inflation. By the time you reduce inflation and the economy is in a recession, which we have, the Federal Reserve this whole time is raising interest rates. As the Federal Reserve is raising interest rates, eventually they're going to start decreasing interest rates. By the time they start decreasing interest rates, this is going to ramp up the economy and take us out of the recession that we're not in. A couple of things need to happen and correlate in order for inflation to go down. Number one, you need to bring down the cost of gas, the cost of oil, the cost of energy in general. Gas is approximately 35%, or energy is approximately 35% of the consumer price index. If you can bring down the price of gas, you can bring down pretty much most of the inflation. Why? It all trickles down. The more expensive it is for gas, the more expensive it is for shipping and distribution and local deliveries, so on and so forth. The more expensive gas is, the more expensive products cost, and the more expensive gas is, the more expensive it is for you to travel. You being the everyday person, the everyday Joe. And the more expensive it is for you to travel, well, everything just costs more money. And the more everything costs, it all trickles down. I've been tracking gas on this channel for around 7 weeks, and I've also been tracking crude oil. Gas is going down for nearly 2 months every single day. Let me show you a quick chart, and then I'm going to show you the crude oil. This is the gas prices. The current price for national gas, an average, is $4.13. Yesterday was $4.16. A week ago, $4.27, and a month ago, $4.80. When I started tracking this, it was $5.01. $5.01, now we have $4.13, $4.14. Well, this is an actual significant decrease and approximately 18% off the top of my head. When I first started this, it was like 12%, 13, 14, and it keeps going up, up, up. Besides for the national average, I wanted to bring your attention to something very, very important, crude oil. Now, gas that you actually put in your car and crude oil, what's the difference? The gas is crude oil after distribution and refinement. This is the price of crude oil. It's the cheapest that it's been since I can remember. $87. When I started tracking this, it was around $105, and then it fluctuated between $94, $95, and $100. $87 is crazy cheap. We're actually lower than we were 6 months ago. Check out the chart. 5 days down 6.5%. 1 month we're down 11%. 6 months we're actually now down 5%. And over the course of a year, we're now only up 28%. If you go back for the year and you go right around here, around June 9th or so, the price of a barrel was $122. I believe June 9th or so is approximately the date that we peaked inflation, because that was the peak price of gas. Now, we are used to gas being at a lower level, high twos or something like that. But if we can get the prices of gas to around the $3 marks, right? $3.50, $3.60, I think as a country, we will be happy. Although this is an inflated price, this is what I call an acceptable inflated price. I don't think that we're going to get gas down to I don't think that we're going to get gas down to $2.50 a gallon, $2.60 a gallon like we absolutely want. However, I do believe we're going to get it to an acceptable number. Now, this is an acceptable number for big box retailers as well. As inflation is going to go down, they're going to be able to charge less money, especially because there's less demand for the products that they already have. When they do this, they're going to increase the time frame that they have to actually get more products, as there's going to be less bottlenecking and there's going to be less demand. Those products are still going to hit the market, but now the products are going to be marked down. Eventually, as I said, the Fed will lower rates. I don't find the articles now and I can't find the videos now, but I listen to CNBC and I listen to all of these experts, economists, and it's so funny. I've been saying this on this channel for quite a while. Now, all of a sudden, the economists are saying, hey, the Federal Reserve will still raise interest rates, which I agree. But probably in the second half of 2023, they will start lowering interest rates, which is going to ramp up the economy. And I agree because I've been saying this for quite a while. But it's funny that now analysts on TV are saying the same thing that we've been saying on this channel for quite a while. Just like we said that we are in a recession about 3 months ago on this channel. One of the other things that can actually reduce the demand is people getting out of work. I know it sounds bad. I reviewed the JOLTS report. We thought that there was going to be 11 million jobs posted. There was actually 10.7 million jobs posted. Now, what does that exactly mean? There's around 5.9 million people looking for jobs. There's around 10.7 million jobs posted. If you divide 10.7 by the 5.9 or so, you get a number of 1.8. The demand is 1.8. The demand was 1.9, which means that for every job, there's 1.9 people looking for every one job. Now there's 1.8 people for every one job. These numbers are going down. This is very good. What you want to have is a one-to-one peg. Now I want to show you a report that I was watching earlier about jobs. I want to read it to you. This article just came out. It's by MarketWatch. It says U.S. jobless claims climb to 260,000 and stick near a 9-month high. Jobless claims have risen since the early spring. I know it's going to sound counterintuitive and it's going to sound really like a douche, but if you want to curb inflation, you must reduce employment. The more people out of work decreases demand. Eventually, the decrease in demand will decrease inflation. Eventually, decrease in inflation is going to force the Fed to stop raising the interest rates and then lower the interest rates. And that will then jumpstart the economy and get us out of a recession. Or if we're already out of the recession, it's going to push and jumpstart our economy, which I believe, and again, I'm not a financial advisor, this is purely entertainment and education, that if everything being what it is, and I've been tracking this for a while, I'm securing this with data, I'm not just talking out my ass, I'm not just flapping at the gums, that it looks like 2023 is going to be a positive year for the stock market, probably double-digit returns. Remember, 75% chances that the year after we had a negative market, a bear market negative market, that there's going to be 17% returns in the following year, which would make 2023 a really good year if you were investing in the stock market. Again, that's from the low points of ending 2022. Now, tomorrow is the first Friday of the month. Every first Friday of the month, the jobs report is coming out. I want to see what the jobs report is going to say. I think this is one of the reasons why the stock market is rallying. This is why I think the stock market is actually going up. Because like me, there's a lot of smart people, or me like them, that analyze these things, and everything happens to be a lagging indicator. Check this out. This is the S&P 500. Over the last 5 days, 1.8 up. Over the last month, 8.4 up. Over the last 6 months, we're still down 7%. And over the last year, we're only down 5.7%. Remember when this was down 22%? This is the Dow Jones. We're barely down for the day. 5 days, we're up 0.5%. 1 month, we're up 5%. 6 months, we're only down 6.8%. And for the year, we're only down 6%. Remember, the Dow Jones was very close to 20% down. And this is the NASDAQ. 1 day, basically even. 5 days, we're up 4.3%. 1 month, we're up 14%. 6 months, we're only now down 10%. And for the year, we're down 14%. But we were down nearly 35%. I think we hit like 33% for the NASDAQ. So a lot of people that invested when everything was going down, down, baby, they ended up making a shit ton of money. Some stocks are up 50%, 100%. Hims grew me my hair back, by the way. So I invest in Hims because I believe in the products. Hims is up like 85% from the low points. I actually put it into my public portfolio for the Patreon. If you guys want to join the Patreon, I share my public portfolio. We have a Telegram group of like-minded individuals. We do bi-weekly live videos where we talk and a lot more stuff for the Patreon. Link is down below. Starts at $5. And I share my public portfolio. I bought into that. Man, it went up like crazy. MicroStrategy up like crazy. There's tons of stocks. Palantir was down at $7. Now it's to like $11. Palantir is up over 50%. So people that invested and had the balls to invest and go with their guts made a lot of money. The only way to win when the economy is going down is to dollar cost average. Because if you're not dollar cost averaging down, next year, when we're going to be up that 17% or so, you might break even. But if you were dollar cost averaging this entire time, not only will you be up 17% and break even, but you will be up 10%, 5%, 20%. I don't know. Depends on how much you dollar cost average, right? Guys, thank you so much. Have a great day. Like, share, subscribe. So far, all the data points to the same thing. 2023 should be a good year for us. Again, data changes like the wind daily, and things can change. Nobody knows what's going to happen. If this war ends in Ukraine, also the economy skyrocket. Everything's going to skyrocket. It's going to be really, really good news because we don't like geopolitical unrest. Guys, thank you. Have a great day.